Okay, welcome back. Alright, so I'm going to go ahead and use another moving average, but this time I'm going to use a 14 exponential moving average. I'm going to apply it to a second gradient thickness there, and I'm going to give it a red color right there. Okay, I'm going to click on OK. Now on the daily time frame, it's pretty cool to use smaller moving averages, and you can actually use a breakout from the smaller moving average, and then as soon as it goes above it, you don't really need to close it out until it actually comes back and hits it again. I mean, look at this, it's kind of rings true more often than not. I mean, look, from right here, where it breaks, that it hits it right there, so you could have gone in there and out of there at 200 pips, or you could have stayed in, took off a half a position, and then wait for it to ride down even lower, then it hits it right there for 543. Then you could have taken off another half a position, alright, and let it ride and keep going and see how you get on, and then it goes up to there. Alright, and you could take off another half position and so forth and so on and so on. But now what I'm looking at is I'm actually looking at from the points at where they cross over. Okay, this is what I'm looking at right there. See where that crosses over? Now I want to take a look at that line, and I also want to take a look from that cross point to seeing the distance of how far away that crossover is to where the candles are. That's one element that I'm looking at. And the reason for that is that when you see where the crossovers appear, the closer they are to the candles, the more you're going to get out of the trade at the end of the day. But if the further away the crossover appears, the less that you're going to get out of it. Like for instance, I mean, here's where it actually crosses over. It's quite far away from it, but then the market reverses and goes back the other way. Alright, so this is a bit of an iffy area. Alright. So I'm looking for where they cross over, plus I want to know if it actually hits a green or a red bar down here as well. Now in this particular instance, it hits a green bar. It hits this one right here. Alright, so that's interesting because the market did go back up. Let's take a look at this area right here, and that's a green bar, and this one's a green bar, but we're below, the histogram's below the vertical scale. We're looking for below the vertical scale, but it's not a red bar, so that doesn't kind of play true with me, so I'm going to leave that alone. And this one, this histogram was above the vertical scale, but and it's a green bar and it lines up, so that's fine. So that's pretty cool. I'm also looking to see if the candle color difference also makes a difference as well. Alright, so let's just keep going and just take a look. Here is a down crossover. Oh, this looks nice. Okay, it's a red candle this time. It does cross away quite far away from that candle, and that's not too bad. It could be expected again with the daily time frames, so that might be like a normal stance for it. But if it's on the larger, smaller time frames with a huge gap, then I might again ignore it. See, sometimes your rules will change on different time frames as well. Alright, so you just need to basically have a little workout to see what the results would be. Okay, so here's a red bar here. So we seem to be having a crossover, a red candle with below the histograms below the vertical scale, plus we're actually lining up on a red bar. That looks pretty good to me. Alright, and also we've actually opened and closed below as well, below the black line. So we're getting more and more elements together now. We might have like 5 elements or 6 elements all put together now. Alright, so let's just keep on going and just find a buy trade and see if that still rings off true. Alright, well, okay. That's what that goes on a red line, but it crosses. But see where it crosses right here? It virtually touches the candle. And this is a rule of exception in my mind a majority of the time, is that when the candles do actually cross or very, very close to the body of them, then I'm pretty more likely to ignore the other elements and go in with this one, because it's from experience that I've actually seen these produce a lot of pips. Alright, but I still like to use the same rules of, like, am I near a support or a resistance level? So I want to still make sure that that is okay, and we can see coincidentally where we would got in there. This is where the market had actually stopped the close price, because we're on the weekend at the moment. Alright, so I'm going to go ahead and put that line on there just in case you can't see that grey line. But this grey line right here is where the market had actually stopped for Friday. Alright, so I'm looking at this area and I can already see straight away that there's a bit of resistance being built there, and there's a bit of resistance being built there. Alright, so I want to know if this is kind of ringing true further to my left. So I'm going to go back a little bit. I'm going to see that there's no iffies going on there, but I can see a bit right here. Alright, and that went on for quite a few days. That was like 1, 2, 3, that's nearly a week there. Just a little bit over a week, we just had a sideways market. Alright, that was like a 150 pip, 200 pip range. And just keep on going back and see if these are some areas that have been respected before. Yes, they have. I mean, look, right here, this is going back in April 2007. 2007, 4 years ago. Alright, 4 years ago, and you can still use these. So that's a major support / resistance level. Alright, so I'm going to go back to that signal that we found, and I'm looking to see whether or not this is going to be worth my while to actually go long on this trade. Now, if it breaks this line, then yes. Now also I've got a confirmation where the market's actually broken above the 200 exponential moving average, and you can see for quite a while it was coming down. So soon it had to retrace. It had to. There's just no ifs, ands or buts about it. The market needs to come back. Alright, it can't keep coming down in a straight line forever. It needs to retrace. Alright. And yeah, it took an attempt to take out that line, but there was a bit of support there from previous years. Okay, so that's why this failed. So it came down and it took a bit of a breather. These are like consolidation areas here from this huge market here. I mean, look, you can see there's great momentum and great support to have this trade go up higher, but because of the resistance there was so strong, it couldn't break it. Alright, so as the days and weeks went by, the market's really tried to establish itself, and you can see where the market intent really got strong there for its second time round. Then the market went sideways for a bit, and it decided it didn't want to come below the 200 moving average this time, because all the traders know that once it breaks that area, at least for the second time, that you should see it go up a little bit more. It's not 100% guaranteed. Nothing really is in this world, but you do have to lean with those instincts, and that's what traders do. They lean with it, and everyone else follows suit, and this is what's happened. It's just gone straight above the 200 moving average. Alright, so that's why that area is really important. Okay, so that would probably ring off as a pretty good trade to get, despite that area right there. So, but if you're not as experienced as I am, then I would basically leave that one alone. Alright, and wait till you build up a little bit of experience and you can read the markets a little bit finer, then you can take on those kind of advanced tradings. Alright, here's another one right here, and this does indeed okay, it's a crossover. This actually is a green bar right there, but it does fall on the red bar of the Accelerator oscillator. Okay, we are below the vertical scale. That's 354 pips. I don't really like that, even though the market came down. So I'm going to probably need some more information there. So I'm going to put my horizontal line tool, and I'm going to go back a bit and see if this is actually a support line where it got rejected before. And look, we see a triple top. Boom, boom, boom. Alright, second double top, it comes down. Third double top, it comes down. So I'm going to be I'm going to be happy with that. And the signal does appear, the sell signal does indeed appear below the resistance line. Okay, so I would take that one. So these are the exceptions to the rules. Alright, and we can use that, and you can always see that my rules have always been finished to see where the trend line, the support and resistance level is. Alright, so now that's there, we can further go on a little bit more, and let's add another moving average to it. Alright, you can add as many moving averages as you want. Alright, I'm going to show you towards the end of the module one called gamma ray trading. It's quite interesting actually, it's quite pretty when you look at it on the chart. Alright, so okay, so let's just change this to a blue, and let's change this to let's try a 26 exponential moving average. Alright, so now we've got some different rules that we can use, and we're looking for maybe where the market crosses here, where each time when the red and blue line crosses over within 26 and 14 move over all the time. Alright, here is where they cross over there. Here is another area where it crosses over here. So let's take a look. Green bar, and the histogram is above the vertical scale, so that's good. It crosses, goes up. We're on a support line right there. Great, keeps going, and we can test the next resistance. That looks good. We can also see that the candles are pretty close to the crossovers as well. So that's also good. We can see that the crossovers are here are pretty close, which is quite good. We've got one right here that crosses that's quite far away from the candles. Yet it still manages to find its way lower. Why? And let's just take a look. Actually the sell signal does appear below the resistance level, so that can come true in our favor as well. So that seems to be pretty okay. Now some other ones that you want to look out for is when all three cross over at the same time. Now this isn't all at the same time. The red crosses the black first, and then later on the blue crosses the black line. You could use these as trigger points. You could say, okay, well, when the red one crosses first, I will get prepared, and then I'll wait for the blue one to cross, and then you can go long or short depending on which way these two moving average cross the black one. Alright. Like for instance here we got we've been in an upwards trend for quite some time, and then the market's decided to break it. It's broken the 200 moving average. All the traders know that the market's getting prepared to swing and go back the other way. All right, for an in-depth, a non-disclosed amount of time, a length of time. Okay, so we can see that the red has crossed the black, so that's trigger number one, and then trigger number two, the blue comes in, and it tells us to go short. Okay, we can go short right there. But we can also take a look at where these cross over. Yes, we've got a red bar. It closes below and opens below the black line, and it also has a red line, a bar below the vertical scale as well on this histogram. So all of those rules that we created at the beginning of the session of this video have come true. Can you see where I'm coming from with this, ladies and gentlemen? Alright, we also, look, we can see there's a support line there as well. There's a resistance line because we're below the market, but there was a support line being developed for a while, and this turned into a resistance once this line got broken. Alright, this is just a phenomenon that just happens, and this is why I love trading, because you get all of these little instances in the market that you can't fathom, but it just puts a big grin on your face, because all these patterns seem to ring true, and especially more so when you break down the elements one at a time and then look for patterns that emerge and happen every single time. Alright, if you don't get 3 out of 4, then you need to sort of think outside the box and use another angle of analysis to see if that would complement that missing element that wasn't there before. Do you understand? Right, this video, or these two videos, you might need to go through again. Alright, I would probably go through these videos at least 2 or 3 more times and study this strategy for maybe about a week. Okay, now I've not really tried this on the 4-hour time frame. As I say, this is a strategy that I've just made up right in front of your very eyes. Okay, so give that a go, and you'll need to change the time frames to a 4-hour or a daily time frame. okay, because every single time that you open it up, it will default to a 1 hour time frame. You can actually change your defaults by using your profiles. I believe you can actually save the profile, alright, and see how you get on. But I don't really do that. It doesn't really take much to go from here to there and switch to time frames. Alright, okay, so give that a go, ladies and gentlemen, and I'll see you very soon, or next week maybe, in the next video. Bye for now.